Almost got to that 4,300 point mark on the benchmark. Where to from here for the market?
I guess if we have a look at this great deal today, it was a huge positive for the market, and just to see what kind of impact it had on the market today. This is the intraday graph of the Australian share market, and you can see as news was released that a deal had actually been agreed to. What we saw was a gap up in the market, and we saw the market with a significant jump there from 4,368 points 1 second to 4,284 points a second later, and you can see that we continue to see the rise to the peaks of the day. The big level that a lot of technical traders and a lot of non-technical traders as well were watching was at 200-day moving average, and that 200-day moving average at 4,295 points. So in actual fact, just closing below that level. So that will be a key test for the market coming through tomorrow. The interesting thing about performance today was that it was the mid-caps which outperformed. We have a look at the blue chips, the ASX 20 stocks. We actually saw underperformance there with a rise of just 0.6%. The ASX 200 was up by 0.8%, while the mid-caps were up by 1.5%. So it does look like earnings a key driver there. We saw some very strong performances from the likes of OneSteel, Longyear and McMahon that helped that mid-cap index to really outperform today. So the market's focusing in very much on earnings, and today was a little bit different from the past few sessions where we did see earnings really giving the Australian market a boost, and then news of that Greek bailout package being agreed to also giving another extra boost.
And Peter, OneSteel, what had to say today? I mean, it was talking about better times to come. Would you be betting on OneSteel given what it had to say?
I guess if we have a look at OneSteel and BlueScope, they have the same type of outlook in terms of the steel-making business, and that is for a slight improvement in the second half in terms of steel volumes going through. But the big difference between BlueScope and OneSteel, of course, are the iron ore operations that OneSteel has. If we have a look at OneSteel's result, the underlying profit was actually up by well, it was a positive result. It wasn't a loss. It was at $78 million. And if we have a look at the steel part of its operations, well, a loss there of $84 million. So no surprises there. And no surprises that given that the very difficult steel environment at the moment, that we are going to see OneSteel repositioning with a new name. If we have a look at the steel earnings, that makes up about 47% of OneSteel's earnings at the moment. The rest coming from mining and mining consumables. So really repositioning with iron ore, seeing I guess, a difficult environment in steel at the moment. But a key difference with OneSteel and BlueScope are those iron ore operations, and it does look like OneSteel strongly looking to reposition. Also, I think the market has been overweighting this risk of a capital raising. We didn't really think there would be a capital raising because there weren't really troubles with the banking covenants, but there was some expectation of a capital raising being built in, and that was really wiped away today. So a strong rally, I think, on the back of that, up by 12.3% today.
Those mining services results out today, a number of them among the best performing shares on the ASX 200.
I mean, that's a key reason why the market did so well today. We knew that the highlight of this earnings season was going to come from that mining services area. We knew that retail was struggling, that the financial sector wasn't looking too good either, but the mining services area is, I guess, the big linchpin in the market, which is looking good. And it's understandable why there's these massive projects here in Australia, capex over oil and gas, mainly coming from LNG projects, and then through iron ore expansions in that Pilbara region and other minerals. It accounts for about $208 billion over the next 3 years, and that's not accounting for any projects that haven't had the final investment decision yet. So that's a massive amount, given that it's taken the last 4 years for that type of spending. We're now going to see that spend over the next 3 years, or potentially even less than that. So these mining services companies doing very well. Longyear record profit. The drilling continues. Also, if we have a look at McMahon, they've in December we saw an upgrade to their full-year forecast as well, $55 to $60 million. That was up from their previous guidance of $45 million, which they upgraded to more than $55 million back in December. So strong performances there. Longyear up over 8% today, and McMahon up over 7%.